Hi, this is Pat with Energy Solution Partners sharing with you our propane market view on Tuesday, May 6th. Keep in mind there is a risk of loss when trading commodity futures and options. Going to spend our time today talking only propane and seeing some interesting factors in the propane market here and some dynamics that have changed. Um, Big shift in some different activities here with the energy boom here in the U.S. And I think it's noteworthy to point a few of these factors out. First of all, as we're all well aware, we are coming off some very low inventory levels here after the heating season that we just went through. Um, but I think there's a few other factors we want to look at beyond just today's inventory levels here and some dynamics that are taking shape here in the propane market. But I know a lot of the different folks are really banging the drum to get your propane bought because of these low inventories, be expecting higher pricing. I'm not so convinced, and so I just want to point out a few other factors other than just simply this inventory level that we keep hearing about. As we look at inventory levels, we are being told we're at very low levels, record level lows, but we don't have to look back too far. And we can see that in 2011, 2012, we were at lower inventories than we are today. And so I keep stacking up where we're at today versus what happened in 2011, 2012, and also what happened with pricing that year. And we'll get into that in a few more slides here. But we don't have to hit the panic button. We have seen inventory levels lower than we are at today, and we have built some have seen some pretty nice weekly builds, I guess, so over the past few weeks. Looking where we were last year, we are definitely at a deficit to last year, but we are 5 million barrels ahead of where we were 2011, 2012. So these levels are not unprecedented. If we look at just Conway itself, same thing. We're slightly ahead of where we were 2011, 2012, and we are behind year-ago levels, but not by a long shot. You can see we're kind of right in the range where the typical builds go. So I don't think our Conway inventories are totally out of line either, and we've got a lot of year ahead of us to build these inventories. And I guess that's what we want to keep monitoring on the weekly basis as we get these weekly inventory numbers, and just make sure that we're keeping pace with what we've seen in the past. The other factor that has helped these builds is the demand on propane, and red line is where the demand has been running here. You can see since February we're off 17% from year-ago levels, and as those prices did climb, they did their job, pinched off demand, and that loss in demand has held through all the way into April. You can see now over the last week the difference in demand from a year ago has closed a little bit, and we'll be watching again this week's inventory report to see what that number did. But these demand numbers are off substantially from what we were seeing a year ago. This slide is from Enterprise Product Partners, and Enterprise is a major player as a propane producer, a transporter, and an exporter. And interesting to note their forecasted demand here for propane. They do go back a couple years in history, and then forecasting all the way out to 2020. And overall demand, domestic demand, looks pretty flat. If we look in this little window here over the past couple years, they do show the export activity that's taken place. And with that export activity, that is somewhat limited. Currently, we are exporting about 400,000 barrels a day. And that is up from about 300,000 average a year ago. But again, that is limited because there's only so many facilities that are able to export this product, and they're pretty well maxed out at capacity right now. There are some plans for new facilities coming on board in 2015 and beyond, but not a whole lot planned here for 2014. So our exports will be limited. The other interesting thing to note here is what Enterprise is forecasting for surplus propane here, and it continues to grow. And again, this is because of all the extra production with the change in the whole energy dynamics here in the U.S. But as we go forward, it looks like there could be a pretty large surplus in propane out into 2020. Now, as we look at production here in the U.S., and I think this is really the key component, and it's not talked about enough what's happening with the propane production here in the U.S. Um, it has really changed over the last few years, again, with the energy revelation here in the U.S. But if we look at the 5-year average, this line down here, where propane production has been, um, the number isn't important, but pretty flat there and in a range. But today we are producing 25% more propane than we were over the 5-year average. And if we compare this year just to a year ago, we're up 10%, and that would be the average from January 1st through today. But a 10% increase in production in just 1 year. Today we're producing 125,000 barrels a day more than we were in 2013. And if we extrapolate that out, that's 3.7 million barrels more per month than we were a year ago. Or from May 1st here through September, that would equate to nearly 19 million barrels more produced today than in 2013 if we keep the current pace going. So even though we are at some low inventory levels, we dug a pretty big hole that we need to get ourselves out of. I think this production has got us on line to do that. Again, we'll hear a lot about exports taking place, but that is limited. And I think on the pace that we're on and the additional production that has come on, we do stand a very good chance of digging ourselves out of this hole in a pretty quick period here. Now, as we look at where prices are at, and currently we've been in this $5 to $10 range, Conway, for quite some time, trading pretty much sideways. If we look a year ago, we're down in the mid 80-cent range, so currently we're running about 15 to 17 cents higher than we were at this point last year. That probably makes sense. Our inventories are lower than a year ago, although we'll want to watch that, see if we close that inventory gap up and what happens to this pricing. I also included the 2011-2012 price in here, and that summer we did remain at some pretty high levels, $1.40, $1.45 Conway. Again, as inventories were at some low levels, stayed below the 5-year average range through the summer, but we did make that inventory up by the fall, and then you can see what pricing did. We went from mid-$1.40s down to $1 a gallon in January, so real short time we dropped 40 to 45 cents a gallon. And I think this certainly is possible again, and we want to be aware of those huge price swings that we can be open to with any long ownership. One way to protect this, we can look at some put options in place to cover any downside protection. If we look at put options in the December-January timeframe, they are costing about 11 cents a gallon, but I do like that strategy. Again, with all this production we have coming on here, I think we are open to some downside here in this propane market. But on the flip side, as we're selling contracts to patrons, I think it's important that you buy that propane and keep your position flat. So you don't want to go into this with a short position, but you do want to protect the downside on anything open that you have. So if you'd like to go into more detail on this, feel free to give us a call. Again, I think our opinion of the crude market falls into this as well, which I had sent that video out here a few days ago. If you'd like to see information on that again, or the link to review that, give me a call and I'll pass that along. But our crude picture is also set up, I think, to give us some softness, and propane will follow that to the downside. So with that, I encourage you to keep your positions fully hedged, and got any questions, give us a call and we'd be happy to go over any strategies with you. Thanks for listening.